Hey guys, Sean here. I hope everyone's staying strong during this market crash. Everything seems to be going down, the stock market is taking a beating, and crypto seems to be facing the apocalypse. But despite all this, gold is staying relatively strong despite the markets crashing around it. Yes, gold is now around 1820 and has been beaten down from 2 grand, but it's actually outperforming every other asset during this inflationary crash. Just look at the smile on my face. And in this video, I want to talk about why having some gold is extremely important. I'm talking about wealth protection, retaining your purchasing power, and having some money outside of the financial system. Because gold is physical, it can't be printed into thin air and takes actual effort to mine and refine. And we need to view how prices are as a sign of trust, right? Now, the reason why stocks and crypto are crashing to hell is because people don't trust them as much as gold. People are doubting their true value, and the market as a whole believes that they are overvalued right now, especially when money is being pulled out of the system. Now, when the tide goes out, you can truly see who is naked. And the tide is being the sea of dollars, you know, those trillions of dollars that were printed in the last 2 years. Now, all this funny money is going to disappear very soon as the Fed is about to sell their bonds and rates are going up. All the assets that were living on a hope and a prayer are about to be cast down to the land of the living dead. As I'm recording this, the S&P is down by a painful 18%, the Nasdaq has been crushed by almost 30%, and Cathie Wood, the rockstar queen of investing's ARK Innovation Fund, is down by 60%. But the story is actually quite different for gold when you compare it in the same time period. Gold is actually still up by 1% and is holding strong amidst all these headwinds, and we are already coming to the middle of the year. And this is the big issue with paper assets right now. A lot of stocks have been artificially pumped up by steamy checks and over-leveraged margin positions and cheap cash thanks to the Fed. But gold is different, it's a store of value and it's living up to its reputation today. Yes, the price of gold has gone down over the last few months, there's no doubt about it, because every asset is deflating. There just has been too much money sloshing in the system. Right now, real interest rates are slowly going up and bonds are beginning to look more and more attractive. And that's why everything's crashing. So if you want to measure an asset's performance accurately during this asset deflation, we need to measure its relative purchasing power. To put it simply, we need to see which falls the least. And the best measure is the classic S&P to gold ratio that I love to pull up because it tells me how stocks are performing relative to gold, which is real money. Now, the lower the ratio is, this means the more purchasing power an ounce of gold has. So just recently, in the late 2021, you would need around 2.5 ounces of gold to buy a single share in the S&P. Now, despite gold's nominal price falling over the past few months, it actually has gained value, right? You now just need around 2 ounces of gold for a single share in the S&P. But the more interesting thing is how gold and the S&P met at 1:1 multiple times in history, and most recently between 2008 and 2013. And that was the perfect time to get into stocks when it was undervalued. And today we can see money leaving equities at a much higher rate versus gold. So where is all this money going to? Well, mainly bonds and cash. And the sentiment now is so bad and everyone is so fearful that they are just willing to take the inflation hit and just get away with capital protection and maybe 2 to 3% interest. Even within precious metals themselves, we can see gold outshining silver as the gold to silver ratio rises even further to 88. Now this just shows how much more the market values gold. Gold is more of a place where money can run to and hide, especially when inflation is still soaring. Yes, silver is a monetary metal, but its industrial component is much bigger, right? And right now, the world's worried about slipping into a recession, and that's why we are seeing silver just get hammered down relentlessly. And that's why I find it very important to just hold some gold. Now, gold is real physical wealth that can't be replicated or conjured up from a printing press. It really represents sheer physical and technological effort to mine this stuff from the ground. Now, I'm not going to go into the history of gold, but we're now stuck in a weird Groundhog Day loop of easing and money printing, then followed by tightening, and then a crash, and then easy money all over again. And I don't think things are really going to change, right? Now, when we think of the US economy, a lot of us believes that it's a free market, but is it truly one? You know, in the free market, the market will balance everything by itself, and that means companies will have to go bankrupt if being mismanaged, there'll be zero bailouts, and no such antics such as printing money to prop up a zombie economy. Now, things are shifting more towards a command economy where we can see the Fed stepping in to set interest rates, giving guidance on how things should be, and basically giving everyone free steamy checks. And that's the core reason why we are in this big mess. I think Peter Schiff once said that the cure for high prices is higher prices, and prices need to stay high enough to suck out all of this excess cash to the point that people just won't pay for it, right? You just can't give rebates like what California is thinking of doing for rising gas prices. There really is no longer a natural rebalancing of the market, and I think this just won't stop. There will be progressively more money chasing fewer goods. And that's why I believe it's wise to have some gold to protect your purchasing power, right? Even when markets are crashing, gold is holding up, and when inflation starts to ramp up again, I'll be glad I have some gold with me. Right now, I think we are witnessing the flow of money moving away from risky assets, especially tech stocks and Bitcoin. People are waking up in masses and they are thinking, wait a minute, the stock market seems to be just out of whack, right? P ratios don't make sense, everyone now has a Robinhood account, and even my next door neighbor thinks he's Warren Buffett. I better get out now while there's still time. Just take a look at the ARK Innovation Fund, right? It is down by 60% in a year. How Cathie Wood can keep a straight face telling her investors to keep betting on innovation is really beyond me. And we can see real businesses and real assets such as Coca-Cola actually stay resilient and even gain strength during this crash, right? That's because, like gold, they have something real. It's a real business that generates real cash flow, and the market right now is sick of pie in the sky ideas and promises that might never be fulfilled. But the craziest asset you would want to hold right now, hands down, is Bitcoin or any cryptocurrency for that matter. The tumble for Bitcoin has been spectacular and has crashed below 30 grand. It is arguably the worst performing asset, if you can even call it one, compared to even the volatile stock market. Now, while Bitcoin is still up over the long period, it looks very near bear market territory. Now, many crypto bros once called Bitcoin both a hedge against inflation and a growth asset, but how can it be both? Now we can see that it's not a good store of value, and when cheap money is gone, people are selling and the big whales are exiting. It's performing more like a tech stock and it's plummeting to earth faster than a meteor. Even stable coins like UST and Luna, coins that are meant to be 1:1 with the US dollar, they are crashing. And honestly, I don't see any point with those coins, right? I'd rather just hold dollars if the coins are going to be at parity with the US dollar. Where is my gambling YOLO upside? How can I make 10 or 20 times profit from that, right? If I'm going to gamble in cryptocurrencies, I want that upshot. And both of them, interestingly enough, have lost their peg, especially Luna, which is now 4 cents on the dollar. So when the tide goes out, when easy money is being put away, now you can begin to see which asset is truly naked. If we take a look at April CPI numbers, it reveals that inflation is still high at 8.3%, and that is already compared to a higher base. Raising rates to 1% still isn't working, and real interest rates are at least negative 7 to 5%. And that isn't good news. Cash is still evaporating away, and if inflation isn't tamped down soon, this could trigger a move to gold despite the rest of the markets crashing. Just think about it, right? A lot of people are exiting the stock market, which they predict is about to hit even lower. They are sitting in cash and they only have two places to go for safety, right? Bonds, which they have to lock in for 2.8 to 3% yield, and if yields goes up, they could get slaughtered if they sell their bonds early, which could happen as the Fed is about to sell their bonds come June. Or they can flee to gold and protect their purchasing power that way. Either scenario is possible, but what's unknown is when the Fed might stop quantitative tightening or even do a U-turn and start injecting money back into the system, right? Right now, it probably won't happen because Powell needs to show the world how much of a tough guy he is fighting the inflation monster, but if it does occur, we can just take a look back in 2008 and 2020 and see how gold will perform, right? We can see that after helicopter money was dropped in 2008 and Oprah Winfrey style steamy checks were given to everyone, gold almost immediately flew up, right? It's not that gold really gained in value, it's more like it accounted for the fact that the dollar is going to be devalued very soon. Plus, if we compare the move together with stocks, we can see that gold outperformed the S&P in the immediate short term once money is injected into the system. So if the Fed decides to go crazy and save the economy with cheap money again, I won't be that worried because I own some gold. Starting from today, I think I'm going to place a gold coin under my pillow and wish for the Fed to start printing money again and have a sweet dream every time I go to sleep. I think it's very important that we must realize that the era of speculation and risky investing won't come back anytime soon. If there's anything even remotely risky, that asset will collapse in spectacular fashion like Bitcoin or tech stocks. Now, gold is truly something that we should be continuously buying and stashing them away as both a means to preserve wealth as well as to hedge against the Fed's bad decision making. And whether you're stacking it as I do or you're new to gold, I really recommend you check out the rest of my video archive, right? It'll teach you everything you ever need to know about buying gold. And I'm talking about the physical stuff, right? You don't just want to be holding paper gold because if the tides go out, you want to be holding the physical metal and not just some paper claim. Now, if you're looking to buy gold, be sure to check out my affiliate link below for a good deal. Plus, if you're looking to average into equities as they bottom, you can sign up for the brokerage Mumu in my link below and get free stocks worth up to thousands of dollars. So let me know what you think about the price of gold. Do you expect it to stay strong or fall more as this market bloodbath continues, right? Let me know in the comments below. And if you enjoyed today's video, be sure to smash the like button and subscribe to my channel. Stay safe and I'll see you soon.